make millions selling mortgages. But first, hit that like and subscribe button for more content like this daily. So can you make a lot of money selling mortgages? Yes you can. Matter of fact, I often ask myself sometimes, why am I not just selling mortgages? Because there's a lot of money in it. So have a client who is actually a good friend of mine who I was in the military with. He got out and decided that he was going to become a mortgage loan originator and want to one day work his way into becoming a mortgage broker. So he called me up one day, he found out I was doing this whole consulting thing, and said, hey, do you think you could help me sell more loans? And to be honest, I didn't really know much about selling loans, or I was like, I don't know, we could try though. The good news is it's not just me, right? I work with a group of people, and we've basically created this think tank. And so we'll get together and we'll bounce ideas off one another, and we'll come up with the solution until it makes sense. And so that's exactly what we did. So I said, you know what? Why don't you pretend that I'm a customer calling right now, and you ask me and say whatever you're gonna say to me the way you would if I was just somebody about to get a mortgage. And so he did your typical stuff, asked me what I did for a living, what my income was I married, did I have kids, and did I have any debt? I said, okay, so let me get back with you in a couple days and see what we can come up with. So I called him back. Well, after bouncing some ideas around, the one thing that we could really only play off of at that is why do you keep asking, why do y'all ask for how much debt I'm in? And maybe we could spin and play off of that. And so turned out it was just, I called him back and he just said, it's just to find out your debt to income ratio. Okay, but that's it? Yep, just want to know your debt to income ratio to see if you're approved for the loan. All right, give me a week or two and I'm gonna give you a call back. So I called him, so get with the think tank, and here's what we came up with. So I called him back and I said, what you're gonna have to do is you're gonna have to start educating every client. So you consult them the way I am you right now. You're gonna have to educate them on certain things to get them to take out more loans. So instead of only, you're killing yourself, working yourself to death to get this guy to buy one house, right? One loan. I said, what if you could turn that one loan into 5 loans or 10 loans or 11 loans all throughout the years? And by the way, I'm not saying screw the guy neither. Matter of fact, I'm saying if he wins, you win. So if you're making money, he's making money. If he's making money, you're making money. It's a good deal for everybody, right? And nobody hates making money. So he was like, well, what do you mean? And I said, you're gonna have to educate them on things like this and start with the debt. So the exact thing we told him was this. Okay, let's just make a thing up for a moment. You got $10,000 in debt, all credit card debt, not too shabby. Your credit card debt is not out of the world crazy high, but you got a decent credit score. And let's say the payment isn't really where you wanted it. Maybe you're a little upset about it. And maybe interest rates are a little high. I know they are now today. And so you go say, all right, you got $10,000 credit card debt, and I want all your debt, cars, everything, right? So what we're gonna do is consolidate it and put it all under one mortgage. So what you're gonna do is say, okay, the house we want, for easy numbers, is $100,000. I got $10,000 in credit card debt, and I got another $10,000 in car payments, the car loans. Okay, assuming the car loans are not that old, what we'll do is we will take, or not that new rather, because remember, like we talked in the video earlier, you actually get punished for paying off things too early. So you'd have to find out if it's too early or not. But for this sake of argument, let's just keep with credit card debt. So you would have the client take $110,000 out as a mortgage. So you're talking about buying the house at $100K and then paying the additional $10,000, paying it towards the credit card debt. And the first thing you're going to tell them is I know the interest rate's high, you're not loving your payment, but here's what we're going to do. You're going to actually take that $10K, pay off your debt, your credit is going to go up higher, and then on top of that, for the next 6 months, you're going to be making the house payment. So your credit's going to go up, and in 6 months, hopefully the interest rates go down, right? And we'll do a refinance, and now you'll be credit card debt free, and you get the interest rate that you were looking for, right? Because when it comes to real estate, right, you marry the price and you marry the price and date the interest rate. It's just how it goes, right? You marry the price tag, because once you pay $100,000, that's what you owe, $100,000. But you can have a 6% interest rate 1 year, interest rates go down to 2%, and you can refi, and now you got a 2% interest rate. So that's what we're hoping for in all this. You go to sorry guys, I'm on MacDill Air Force Base, and some weird things going on around here, but you go to refi, and now you got the interest rate that you actually want, and now you're debt free as far as credit cards go. Next, you let a couple months go by. Hopefully maybe let's say interest rates are really low. Let's say the market actually has gone up, so your house is actually, you as a loan originator know you're following the trends of the market, so you know the housing market is up again. So you just say, hey, you know what? Give them a call, shoot them a text. I've got really exciting news for you. Let me know when you got a minute. I think you're going to be really interested in what I've got to say about your mortgage. You call them, text them, whatever. They call you, you call them, whatever, and you say, hey, have you had your house appraised lately? They're probably going to say no. Say, well, here's what I would recommend that you guys do. You get your house appraised, and we start looking for like a duplex or a fourplex, and we take out the equity of your home to buy a fourplex. And if we do this right, and the only way we're going to do this is right, I'm not going to let you do it any other way, is to buy it so that the tenants are covering not only the mortgage on the duplex or the fourplex or whatever you buy, but also covers your mortgage. So now you don't have a house payment. Other people are paying your house payment. Well, they're going to love the sound of that. It might be scary at first, and you may have to hold their hand in the process, but and they may say, I don't want to be, a landlord. I don't want to have to go, fix pipes in the middle of the night, which you don't as a landowner or a property owner. But people think that. And so you walk them through all that process, and you say, yeah, but look, what if I told you didn't have to? And on top of that, you no longer have a home payment. They like the sound of it. Now, you have credit card debt free, assuming you haven't racked up your credit card again. You now own your home, and now a duplex, fourplex, triplex, whatever it is you bought, and now you don't even have a home payment anymore. And you, the loan originator, have just not wrote one mortgage, not two mortgages, but three mortgages. And guess what's going to happen? Year or two goes by, the market's going to go up again, and you're going to refi all three of them. That's three more mortgages. And then, if you're smart, you buy 3 or 4 more properties, 5 more properties with that, depending on, if they want 10% down, 20% down, or whatever. Maybe you can do some security-backed loans or something with DCSRs or something. But the point is your job is to write loans. And I think it's important to understand that if your client wins and makes money, you will win and make money. So don't screw them over. Set it up for them to win. So you may have to learn about real estate investing as a loan officer, as a loan originator. That's not a bad thing. And then you're going to have to teach and educate your clients on that very topic. And now you go from just selling one loan one time to this guy to you're writing loans to him every other year. And if you do that for every client you have, you're not going to get all of them to do it. There's going to be people who are skeptical. There's going to be people saying, man, I don't know. Like, I don't think I really want to be a landowner or a property owner or landlord. Okay, fine. That's okay. That's not your customer. Sell them a mortgage, and you know what? If they ever decide to sell their house and buy another one, keep in tabs with them so that you can sell them that one again. But you will have people that will take that offer, and if you do them right and you're actually successful and they're successful, they're going to tell all their friends and family about it, and they're going to want to do it. Next thing you know, you've got a guy who's saying, hey man, this is my brother, my best friend, this is, you know, whoever. I was telling him about what you did with the whole getting us into real estate thing. I was wondering if you could hook him up. Absolutely I can. Absolutely, that's what I do. So that's what we did for him. There is so much money in loan origination. Selling mortgages, man, is the craziest way to make a living, and yet it can make so much money. But like real estate, you eat what you kill. It's a sales job, but you gotta sometimes think out of the box. And it's funny, man, he was so close. Sometimes that's what happens too, is you're so close to something that you can't see that you're making these mistakes. And he was so stuck on trying to find more people to get in the door to make more sales that he didn't bother to realize that you have this pool of people you've already worked with. Now, just how can you work with them more and get more loans written to them that also benefits them? You know, you have this like pool of people that have already told you yes. But you're kind of just like throwing them to the wayside and just so worried about the new guy to say yes. And I'm not saying that you don't need to worry about the new guy to say yes, but you got to time block out your time where you sit there and go, okay, I've got to go out here and try to meet some new people and get some more yeses that are new yeses that I didn't have before. And then you got to time block some time out and go, okay, let me, you know, Excel sheet, whatever. Hey, you know, Tom and Holly bought this house 3 years ago and they got it at this interest rate, and you know what, right now the interest rates are down and I bet the market's up, and would you look at that, I bet if they got their house appraised, they probably got some pretty good amount of equity in that home, and maybe we could get them into a duplex, fourplex situation. Now they don't have a house payment and they're now landlords and they're in the real estate game, just like that, boom. And if they're in the real estate game winning, you're in the real estate game winning, because they're going to want to keep buying more. They've got that taste. Guess what? I like not having a house payment. It'd be nice if I didn't have car payments either. Let's see if we can get another duplex and get them to pay our fucking car payment. Right? That's the name of the game. So that's what I had my buddy do. This was probably 2-3 years ago. He's killing it. Very happy for him. He did me well too. He took care of me too. Still continues to take care of me. And yeah, that's one of the ways you can make some money. And that's also another example of how a consultant can be useful, in how, again, I wasn't that close to the fires, they say. He was so close to it that all he could think about was that one thing. As soon as he got me on board, and he really got my team on board, we all got in a room and started thinking about it in a way he just couldn't, because he was too close to it. So sometimes that's how hiring a consultant can be valuable. And again, it doesn't have to just go towards loans, man. Those tactics can go towards IT companies, car sales. I mean, you name it. I mean, I'm not saying like that you're going to try to convince an IT tech person to go into real estate all of a sudden, although you might. I'm just simply saying there's some things you can take from every industry and because at the end of the day, it's all business. So, you know, I've had things work on selling, like for instance, I got a client right now who is buying and rolling up dentist office. Guess what? Buying and rolling up dentist office and then exiting and making a bunch of money works on dentists. It also works on retirement homes. So, you know, I mean, and it also works on construction companies. You can buy and roll up HVAC companies. You can buy and roll up plumbing companies. You can buy and roll up framing companies. I mean, it's all pretty much just processes and procedures. So if you know how to do that with plumbing, if you know how to do that with IT tech companies, you can do it with dentist offices too. It's all the same stuff. So again, guys, just another example of how you can use consultants. I kind of went on a ramble there, but yes, you in fact can make millions selling mortgages. It's a good industry. The finance industry is a good one to be in, and that's one of the ways you can get involved. And the good news is a mortgage loan originator all you got to do, it's like a real estate license. You go sit in a class for a couple days, take a test, you pass, you start selling mortgages. So until next time, guys.